Well, hello, and welcome to the Carrier Update, brought to you by Powerfleet. I'm Zach Strickland here with Kevin Hill, filling in for Anthony Smith today and maybe a few days this week. Kevin, so I've got our tender rejection index. So if you've been paying attention to the storyline of the tender rejection index, since we came out of the break, it was actually relatively high. Like you see the Christmas season, you were a broker, you know what happens. Everything gets crazy and haywire around Christmas, but then it kind of settles down pretty quickly after the holiday. Capacity comes back online, everybody kind of gets back to business. It happened last year, it happened the year before that, this one kind of was sticky at a high level. You know what I'm saying?
I know what you're saying. The last couple of years, 2021 and now in 2022, that first quarter, it's just not, you just don't skate through it, and you have your loads, and it gets pretty, volumes kind of drop, and you kind of entertain yourself a little bit.
I think we even said something about making memes.
Memes, cat memes are the best, but memes, it's the slow period in freight. It's all relative though, right?
Yeah, it's all relative, and this year for sure. Now last year we say that it kind of collapsed and became easier, but it was a 22% tender rejection rate, still historically high. Anything over 20%, you cannot relax.
It is. I did a lot of flatbed freight, and Thomas Wass and I did the carrier updates yesterday, and right now flatbed OTRI is 30%.
Out of control.
It is out of control, right? I mean, you especially in the flatbed market in Q1,
this time of
it's
year,
pretty easy to find a trot.
Right.
Not this year, probably not last year either, but certainly not this year.
Exactly. So the overall tender rejection index, of course, has flatbed, reefer, and mostly van freight included in it. About 70% of the data is van freight, but we're seeing it's coming down. It's starting to fall. It's starting quite rapidly, but not necessarily to a point where we're going to say, okay, everything's going to get easier. We've got a 21.43 tender rejection rate right now, still above largely what we saw throughout Thanksgiving and most of November, and really the majority of peak season, or theoretical peak season, if you will. We're still very high. So it's starting to come down. We kind of expected it would at this point, but a lot of disconnection from seasonality right now, and that's the storyline. We can say, okay, maybe this is it, but you really can't say that at this point. You really can't say this is where the market is starting to turn, because it has shown us time and time again that we cannot rely on historical patterns.
No, it's showing you there's a seasonal trend. It's going into Q1, but that Q1, by a seasonal measure of other Q1s, other Januaries, is so strong.
Yeah, it's extremely strong, and the directionality here, even though it's kind of coming down over the last few days, we're still very high through the early part of January. So let's look at our next chart, which should be the outbound tender volume index. Yes, it is, and it is up and down. It is a mixed bag of seasonal trends here. So the tender volume index in blue, that's the current year. The green line is previous year, that's 2020. And you can see even year over year, a lot of wonky behavior here. Over Thanksgiving, we were well under the previous year, and throughout the holidays though, volumes actually stayed elevated, and this trend, this downward deceleration of volumes throughout December last year was much stronger than it was this year. This year it's almost like shippers are like, oh, we're not so fast. We got burned a little bit last year by thinking that we could go into January, February and kind of ease off everything and have our seasonal freight here in March. Not the case. So it looks like a little bit of that still persisting here. We have jumped back over previous year, and it looks like day over day, Kevin Hill, even though, yes, there is some seasonal easing, that's a pretty big jump up in overall volumes.
So what we're saying is that the outlook is that Q1 of 2022 is looking like it's going to be stronger than Q1 of 2021.
So far, because if we're looking at this from an accepted volume measure, like we're way above last year, because we have a good 1.5%, 2% difference in that tender rejection index, and all the tenders are included in this index here. So truckload demand itself, and really we look at this for directional signals, not necessarily absolute truck volume, because we're really looking for things like this, a huge day over day spike. We had what is a 4.1% day over day increase in the tender volume index. That's a pretty big signal.
That is a signal.
And you can't really sit on that too long, because the volumes right now, even though tender rejection rate's coming down, this demand side signal says, hey, there's a lot more pressure that's going to be applied on it eventually. So you cannot take it at face value. Some mixed directions going on right now. I mean, spot rates still very high. They just haven't fallen down. It looks like we've got a lot of plateauing going on as well.
Yeah, Q1 spot rates will be interesting to see. Well, let's carry your update here in the first round. Back over to Kaylee and Michael.